Hello, my name is Brehon Mills, and I would like to welcome you back to the channel. Where not only do we talk about great stocks, but we also talk about great books. Listen, family, we are getting one step closer to putting the coronavirus in our rearview mirror. People are excited to get back to doing the things they love. People love to go to theme parks. People love to travel to different places, to Miami, to California, to Jamaica, to Cancun, to Brazil. People love to travel all over the world. As a matter of fact, I have this shirt here. This is an awesome shirt. If you like to purchase stocks and you like to get that passport stamp, Stocks and Stamps, baby. That's a great book. This is a great t-shirt for you. And check out the link in the description. All right. Listen, and also people love to go to the movies. And I know with all of the streaming services coming out, people are thinking that, the movie theaters are going to fall by the wayside. But there are millions of people in this country and millions of people across all over the world that still would love to go to the movies and see their characters on the big screen. All right. And that brings me to AMC stock. Now, AMC stock was a part of, the thing with GameStop where they were, the Reddit kids and the social media kids were buying into the stock and they were pumping the stock up. And then you had the shorters who were actually shorting the stock and they were creating tight squeezes. And so what happens is when a company or when some people short stocks, they borrow the stock from the broker and then they sell it to the market with an obligation to buy back those shares at a later date. And so as people continue buying these shares of stock, it increases the overall value of the stock. And so as the stock price goes up, these shorters or these short sellers are losing money with every penny that stock goes up. So if they actually purchased or if they were shorting the stock at 10 and it went to 9, that would be profitable for them. But if they went to 11 or 12 or 13, and they are talking about huge losses. Now they're going to have to buy back this stock at that price, which is 11, 12, or 13, etc. This is just an example. And this creates huge losses for the short sellers. All right. And that's what you call a short squeeze. So AMC and GameStop was caught up in that stuff. But since then, AMC stock has cooled down and it went all the way down to, I think, around $5 a share, which was a good price. Now, that was a great opportunity and a great price to buy back in. And as we can see that the stock has been trending up above the 20-day moving average. No huge spikes up, just a nice steady upward trend. Now, this is good because, again, you had an influx of buyers and they were going against the short sellers and the stock was acting all erratic. It was all over the place. And that's not what you want when you are a long-term investor, when you're invested into a company. Now, when you are a trader, you want the action. You want all of the volatility because that gives you opportunities to jump in the stock, jump out the stock, jump in the stock, jump out the stock. So you want that volatility if you are a trader. But if you're a long-term investor and you believe in the future of AMC and you are in position yourself to add more shares and you are destined to be in this stock for the next year or 2 years or 5 years or 10 years, then this is exactly what you want to see. You want to see a nice, smooth upward trend. Now, the day it did spike from $8 to $10, had a high of $11, but again, we did come back some. They would come back down today, where we are hovering around $9.70. So again, if you're thinking about buying into AMC, we want to see nice pullbacks before we jump in. All right. Now, we don't want to buy here. We didn't want to buy at 11 because sometimes what happens is the price shoots up to $11 and all of a sudden the novice traders, they rush jumping in thinking that they're going to miss the train. And then what happened? it falls back down to $9. Now they've lost $2. Okay, so what we want to do is, before jumping back into AMC, we want to see more of a pullback. All right, now this candle here that's developing is a doji candle. So the doji candle is a sign of indecision. Okay, so there's a sign of indecision. So right now, it doesn't know what it wants to do. Does it want to continue going up? Does it want to continue going down? So the bulls are trying to drive the price up, the bears are trying to drive the price down, and they're at an even keel. So that creates a period of indecision. All right, but as we take a much closer look, the 15-minute chart. All right, so we can see that it's starting to stabilize around the so we did have some support there around 940, 960 mark. So we can wait and see, or it may come back down to the 20-day moving average. Okay, so whenever we jump into stocks, this is key. This is what you should do. Again, I'm not a financial advisor, but stocks have a tendency of going up and coming down. All right, going up and coming down. So they move away from the 20-day moving average, they come back to the 20-day moving average. They move away from the 20-day moving average, they come back to the 20-day moving average. So what you would do if you're trying to buy AMC at the right time and continuously add positions, you want to buy when it touches the 20-day moving average. Okay, all right, it's going to move away from the 20-day moving average. You don't want to buy there because, again, it's going to come back. So the 20-day moving average acts as a rubber band. So once the stock moves away from the 20-day moving average, too far away, it always snaps back to the 20-day moving average. All right, so again, AMC appears to be heading in the right direction, especially as movie theaters across the country continue to open their theaters. I think next month theaters are going to be opening up. I know here in Virginia, movie theaters are already open. We've been going. Well, I haven't been in a long time, but I think I've been to maybe one movie in the last 3 or 4 months. But again, those movie theaters are open. All right. Now, again, that's all I have for today. Remember, we want to buy when the stock touches the 20-day moving average, and then we want to ride that wave back up. Okay. When it comes back down to the 20-day moving average, that's when we buy and we ride that wave back up. Okay. That's how you buy. That's how you add positions. Now, listen, I hope this video added a little bit of value to you. Now, if it did, please hit the like button. And this is your first time checking me out, hit the subscribe button and keep coming back for more wealth building information. Peace.